Let's get straight to it. Kwok, the co-founder of EasyA, believes XRP is the most obvious buy right now, especially for first-time crypto investors. Why? Because, according to him, Bitcoin and Ethereum have become too expensive. Kwok says retail investors are priced out of Bitcoin and Ethereum, and that's making XRP the next logical option due to its low price and large cap status. At the time of his statement, Bitcoin is trading close to $120,000, Ethereum is above $3,500, and XRP just hit $3.60. Compared to BTC and ETH, XRP looks like a bargain. But is it really? Kwok's argument is centered on what he calls a deceptively simple investment case. And he may have a point. Many retail investors are drawn to what looks cheap. He says XRP's simplicity is its strength, and that this pattern of behavior is nothing new. We've seen it before. Retail floods into assets with lower prices during bull runs, regardless of fundamentals. Think of Shiba Inu and Dogecoin. During the last bull market, XRP traded for less than $0.0000001. Yet people jumped in, buying billions of tokens with just a few dollars. It wasn't about utility. It was about the feeling of owning a lot of something. According to Kwok, this psychology could make XRP highly appealing in the next run. But here's where we need to pause. Unlike meme coins, XRP actually does have fundamentals. It's one of the oldest cryptocurrencies and is used in real-world payment systems, especially for cross-border transactions. But does that alone make it the most obvious buy? Kwok highlights the sheer number of retail holders as proof of XRP's appeal. The XRP-rich list shows that out of 6.696 million wallets, about 5.7 million belong to small investors holding less than 1,000 XRP each. Over 2.9 million wallets have between 0 and 20 XRP. Another 2.52 million wallets hold between 20 and 500 XRP. That's a huge concentration of small-scale holders. So yes, XRP seems to have found its niche among regular, non-institutional investors. And it's not hard to see why. It's a well-known name, it's cheap relative to Bitcoin, and it has actual use cases. That ticks a lot of boxes. But let's also look at the other side. Being cheap per token doesn't mean something is undervalued. A lower unit price doesn't necessarily mean more room for growth. A crypto asset's value is determined by market capitalization, not just price per coin. So, while XRP might seem affordable at $3.60, its market cap is still massive. If it were to reach, say, $25, an ambitious prediction by analyst Armando Pantoja, that would push its market cap to around $1.5 trillion. For perspective, that's more than what Bitcoin is worth today. And there's another layer, perception versus fundamentals. While Kwok and some analysts, like Aminix, argue that XRP could create more millionaires than Bitcoin, we have to be cautious. Predictions like this often ignore market realities and tend to feed into hype. Even XRP's strong fundamentals don't guarantee such explosive returns. The token has had a long and complex history, including legal issues with the SEC that are still shaping its trajectory. Still, Kwok's logic is not without merit. For new investors intimidated by the high cost of entry into BTC or ETH, XRP feels like a more manageable starting point. You don't need $100,000. You can start with a few dollars. That's powerful for mass adoption. In the end, XRP's real strength might be its psychological accessibility. It feels easy to buy, familiar, and reasonably priced. Whether that translates to long-term returns is a different story. But in a market increasingly driven by emotion, hype, and accessibility, that could be all it needs. So, is XRP the most obvious buy? Maybe, but that doesn't mean it's the smartest one, at least not without doing your homework first.